Hey there, welcome to another episode of the BlockCrunch podcast, the podcast where we talk to investors, entrepreneurs, and founders in the crypto space to discuss big ideas every week. I'm your host, Jason Choi, and today we have a very special guest by the name of Anthony Pompliano, or as he's more popularly known, Pomp. Pomp is the managing partner and co-founder of Full Tilt Capital, a venture capital fund recently acquired by Morgan Creek Capital, which has dedicated its second fund to solely invest in crypto and blockchain-based assets. Pomp is also a vocal supporter of the tokenization movement, popularizing the hashtag on Twitter, "The virus is spreading," referring to the contagious mind virus that is all things cryptocurrencies, which is something that I definitely have contracted. So today, I'll be talking about the idea of tokenization with Pomp, what it is, and where it's going. And if you haven't already, please do rate this podcast on Stitcher, Apple Podcast, Spotify, or YouTube, wherever you're listening to this, because it does help us get this out to as many people as possible. And you can also find me on Twitter at Mr. Jason Choi. That's MrJasonChoi. And one last thing before we begin, I'll be talking at the Blockchain Economic Forum in San Francisco in the middle of June 2018. So if you want to meet me in person, or you want to listen to talks by other speakers such as Vinny Lingham from Civic and Multicoin Capital, as well as Adam Draper from Boost VC, who has been on the show before, then definitely go check it out. And you can use my code BEFJASONC for 40% off all tickets. So, with that being said, let's buckle up and dive right into it.
Worldwide phenomenon.
Hey everybody, welcome to another episode of the BlockCrunch podcast, the podcast where we talk to the most prominent voices in crypto to condense big ideas into 20 minutes. I'm your host, Jason Choi, and today we have a very special guest with us, the managing partner at Full Tilt Capital, Anthony Pompliano. So Pomp, thank you very much for coming onto this show.
Absolutely. Thank you for having me.
So Pomp, can we get started by having you tell us a little bit about what drew you to crypto in the first place?
Yeah, look, I think that there was two things, right? One was this idea of a digital world where it was much more based on math and software than human bias and emotion. And then the second was I originally got exposure through infrastructure. So this idea that I could buy a piece of hardware, plug it in, put some software on it, lend the computing power to secure a network and get paid for it through the incentive mechanism just fascinated me, right? And so I started there, and from there just kind of went down the rabbit hole, and here we are.
And you currently are the managing partner at Full Tilt Capital. So can you tell us a little bit about how that got started and what the focus of the firm is?
Yeah, so we started Full Tilt about 2 years ago or so. And we started out as an early stage venture fund, merely looking to find the most compelling founders and back them as early as possible. Just recently, we actually did a transaction where we sold Full Tilt to Morgan Creek Capital. And Morgan Creek is a multi-billion-dollar, financial asset manager. And we partnered up with the founder there, Mark Yusko. Mark, myself, and Jason Williams, my partner at Full Tilt, are all now working to build out what is being called Morgan Creek Blockchain Capital, with a focus on how do we take the blockchain technology and apply it to real-world assets.
Before we dive deeper into the concepts of tokenization, which you are a big supporter of, you have a pretty interesting background before coming to venture. So maybe you can talk a little bit about that as well.
Absolutely. Look, I was in the Army for 6.5 years, then built two smaller technology companies, sold those in 2012, 2013. And then I went and I ran a number of different product and growth teams at Facebook and Snapchat before starting Full Tilt. And so, coming at this from a technology background is interesting because we're probably more on the finance side now than we are on the technology side.
Got it. And focusing more on Full Tilt now, you sent out a letter to your investors not too long ago stating that, the second fund of your VC firm will focus 100% on crypto and blockchain companies. So I'm curious, what were their reactions like?
They loved it. I think that everyone who, understands all of the upside and all of the potential of the blockchain, cryptocurrencies, tokenization, just is trying to get exposure, right? And so they're looking for individuals who have some sort of insight, some sort of access to that industry, and can help them deploy capital in a responsible, compliant, and secure way.
Now, kind of shifting gears to focus on tokenization, which is something you talk a lot about in your blog posts on Medium and on your Twitter account. So, can you explain to our listeners, first of all, what is tokenization?
Tokenization is merely taking the capital stack or the cap table of an asset. So that could be a company, real estate, etc. And rather than it being based on paper share certificates, just digitizing it, right? Basically doing a one-for-one swap from the paper share certificates to a digital token. And so by holding that digital token, you basically hold one share of the company, and it opens up a whole new world of possibilities by doing that.
And along the same vein, what would a world in which everything is tokenized look like? What are some of the most important things that we should be tokenizing first?
Yeah, I think that the most common things in the beginning are going to be the LP interest in funds and real estate. They have the least complexity. People already understand the asset, and one of the knocks against the asset is liquidity. So I think that's kind of a really low hanging fruit. In terms of medium to long term, I think we'll see companies. Some of them are already being tokenized today. But as those come online, they just have more complexity. They usually have more shareholders, and there's mechanisms around voting and governance and things like that that maybe aren't as prevalent with the funds and real estate. And so that stuff will happen as well. But I think it just might take a little bit longer.
I think you've already touched on this a little bit, but I'm curious because some people are looking at tokenization, some people who are not in the blockchain space, and they look at tokenization and they think, why can't we just, securitize these assets the same way that a lot of banks have been doing for real estate bonds or mortgages for years already? Why can't we just securitize these loans or assets to lower risk and increase liquidity? Or in other words, why is tokenization a next step, an improvement on top of securitization?
When I think of tokenization, there's two components, right? There's the fractional ownership of an asset, and then there's the digitization of that fractional ownership, right? And so if you think of most assets in the real world, right, companies, equity, debt, et cetera, they're already fractionalized, right, in terms of ownership. So even if it's a fraction of one, there's still a fractional ownership, right? A company, for example, has multiple owners and hundreds, if not thousands of shares, right? Now, in the tokenization process, what ends up happening is you're walking into an asset that already has that fractional ownership, and so you merely have to digitize it, right? And the process of digitizing that capital stack just means that rather than have the paper share certificate as the unit of ownership, you're going to allow the blockchain to manage the ownership structure, right, or the capital table. And so the way that you do that is everyone who holds shares in the company merely holds a token that is on the blockchain, right? And it brings a whole host of advantages, but the process is it's very much evolutionary rather than revolutionary. And so I always tell folks this is the most depressing part of the conversation, where I tell you it's really not that new, exciting, or disruptive. It's just merely a tweak to the system we already have, and that's okay.
And can you speak specifically to what some of those tweaks are? You mentioned that putting some of these assets onto the blockchain will bring about some of the benefits. And can you illustrate, what are some of these benefits on top of just pure securitization?
Yeah, I think that the two biggest things are you get global liquidity. So you're able to take an asset that previously was in a illiquid market and bring it to a liquid market where the investor base is, much larger. So not only is it liquid, but just a bigger base of people. And the second is the transactions are more efficient, right? And so what that means is that take a company, for example, they can accept different types of currencies. So they can accept fiat, they can accept digital assets as the actual investment currency. They then give the digital currency in exchange. That transaction is involving less and less middlemen and banks. And so you get a more efficient transaction there. and then you're increasing the number of currencies that you accept, and so obviously that makes it more attractive to a certain group of people as well.
I'll have to disagree with you here in that when you said it's only evolutionary and it's boring. I actually think it's very exciting, and and I think you probably share the same sentiment too, because in a letter to investors, you wrote that we don't believe the majority of companies will be utilizing traditional fundraising mechanisms like priced equity and convertible debt. So you are expecting some type of a revolution to happen here, and what excites me the most is that you're expecting it to happen by 2023. So I'm curious because that's a very aggressive timeline. So I'm curious as to what you are seeing right now that makes you so optimistic that we will be able to kind of shift all of these assets onto the blockchain, kind of tokenize everything by 2023.
Yeah, look, we basically said in 5 years, right? And so the reason why we picked 5 years was we felt, it's the Bill Gates quote: you basically overestimate what you can do in 2 and underestimate what you can do in 10, right? But I think that the bigger piece is every asset owner that we talk to, when we explain the benefits and the process, they're interested in doing this. And so does that happen in 1 year, 2 years, 3 years? Probably not. 5 years, though, we think it's going to be common, right? And so that was kind of the benchmark. And maybe we're off by a year or two. That's okay. But we just think that this is exponentially better process and a better mechanism. And so we feel like asset owners will force investors to participate this way because it's better for everyone involved.
And are you seeing any specific companies or projects in this space that are dealing with tokenization that excites you the most?
Yeah, I think right now the kind of most developed aspect of the market is the infrastructure. So whether it's Harbor, Securitize, CoinList, etc. I think what you end up getting is a bunch of issuance platforms, a bunch of protocols, and a bunch of exchanges, Open Finance Network, T0, et cetera, that are all being built. And so we're super, super early. Right? And I keep telling people, like, 12 months from now, the world's going to just start talking about security tokens, right? The amount of people looking at this, working on this, interested in this is so small today that sometimes you need to go slow to go fast, right? And so, like, for the next 12 months, it's okay if we go slow. That is perfectly fine. But let's make sure we build the right infrastructure, the right foundation. And then, as it kind of ramps up, then we can accelerate and go really fast, right? But I think that that infrastructure is probably the part right now that's the most important and also the most exciting because of the importance that's put on it.
Speaking of the foundation, I'd like to focus the next question on the regulation side of the space. So assuming we can tokenize the equity of any startup or any ambitious projects, right? So theoretically, anyone, anywhere, like you said, can invest in any project that they want to see. And hopefully what this will lead to is an increase in the pace of innovation. But what worries me is that historically, institutions like the SEC are very strict when it comes to deciding who can invest in what types of ventures, right? So for ambitious early stage projects, for instance, you often have to have a certain level of wealth before you can even invest. And there are a lot of KYC, AML laws that add another layer of friction on top of that. So do you see these regulations as a potential existential threat to the benefits that tokenizations can bring? And if you were sitting across from, say, a regulator or a legislator today, what would you say to them to make sure they do the right thing?
Yeah, I think that most of the regulation for security tokens is already figured out, right? The part that I actually think is more important to focus on when it comes to security tokens is not the SEC type regulations, right, or the financial regulations. It's the state and national laws around data and blockchains. So California, for example, has put forth a bill where they'd like to pass a law that explicitly allows for it to be legally upheld in a court of law that a blockchain can manage the capital stack of a company, right? We believe that the way that the company or the way that the law is written today, that is already on the books, that would uphold in a court of law. But obviously, having an explicit law on the books only solidifies that and creates less uncertainty, right? And so it's that type of legal ramifications that we're interested in. I think that we've got a higher level of confidence when it comes to like the financial regulations, the SEC, et cetera.
At the same time, when you look at countries like India or China, they seem to be kind of clamping down pretty hard on just cryptocurrencies or crypto assets in general. Do you think this is warranted, or do you think maybe they have some misconceptions about the space?
Yeah, I think that they've got no clue when it comes to delineating. Actually, that's probably unfair. I probably shouldn't say that they have no clue, but I think they have very little understanding of the difference between utility and the security tokens. And so obviously,
There is the likelihood that over time people will start to bifurcate those markets.
Mm-hmm. On a similar tangent, some people have said that using a blockchain to tokenize everything might be an overkill in some cases. So can you think of any kind of cases where tokenizing something using the blockchain is not necessary, or are you very much kind of universally bullish in this space?
No, look, I think that there's it's a piece of technology, right? And so the piece of technology will be helpful in some scenarios, and it will not be helpful in other scenarios, right? Anyone who says that a blockchain is 100% of the time a better technology is lying to themselves, right? So with that said, I think that the blockchain is in many cases a better piece of technology, but definitely not always. And I also think that just because it's a better piece of technology doesn't mean we have to implement it today, right? There's this idea that, hey, theoretically the blockchain should be a better piece of technology in a certain scenario, but we might not be there yet in terms of the technical development. And so over time, maybe we should be patient in the beginning, right, and implement it later. And so there's multiple perspectives or complexities to this that I think need to be considered when answering that question. And unfortunately, we live in a binary world where people just, they want the headlines, right? It's just, hey, is blockchain better or not? And frankly, it's probably more gray than it is black or white.
For sure. I'd like to move on to talking about some of your tweets. So, one of the things that excite me the most about following you on Twitter is the fact that you're always tweeting news about how, a government or a big company is embracing some application of blockchain. And you're always talking about how the crypto virus is spreading. So, I'm curious as to, what is one example of a company or government or an entity using blockchain technology? What is one example of, the crypto virus spreading that excites you the most so far?
Yeah, look, so the quote, the virus is spreading, somehow accidentally became a thing, right? I tweeted it one day. I was just excited, and people really latched on to it. And so it's just become this fun thing that, people tweet at me all day long, all this news, and they're like, the virus is spreading, the virus is spreading. What that really means is just there's momentum, right? That there's this thing, this piece of technology, and everyone is playing with it, and they're trying it, and they're experimenting, and they're just really enthusiastic. And so I think that very similar to a virus, the enthusiasm around blockchain, is going to be very, very hard to stop. And then what you see is it's spreading in unpredictable ways, right? Very similar to a virus. So if you look at everything from governments to private companies to public-private partnerships to individuals, like everyone is using this thing, and they're using it in all sorts of really interesting and valuable ways. And so I think that the phrase "the virus is spreading," one is people remember it, right, and it's kind of playful and joking about it, etc. And then two is it's accurate. Right. And if you think of blockchain as a virus, I think that's what's happening. And so I think that I've just used that as a way to identify and kind of promote really cool, interesting things that are happening, with the technology.
Yeah, and it's awesome to see you tweeting at Kanye West as well.
Kanye's listening, man. He knows what's going.
One day he'll start to embrace blockchain technology.
Yeah, look, he is absolutely the best person to get this on a global scale. In my opinion, he understands pop culture. He understands technology. He understands power, decentralization, finance, fashion, products, everything, right? And so it's what started out as me telling him he should tokenize his retail company Yeezy, kind of spiraled out of control, and now all of a sudden all these people are tweeting at him about blockchain and Bitcoin. And so, look, I think that he'll talk about it one day on Twitter. He's talked about it in a couple of interviews, and it's just a fun thing now.
Yeah, I think it speaks a lot to the power of social media and kind of just spreading ideas or spreading virus in this case.
Absolutely.
And Pomp, just to close us off, I'm always ask my interviewees at the end of these interviews, what is one book or one advice or an interesting project that helped you the most when it comes to understanding blockchain when you were first starting out?
Ooh. I would say that probably the most interesting thing to me was this book called Digital Gold. It's less like, going to teach you something. It's more of a story of just kind of the beginning and some of the players, etc. But for me, it was just exciting, right? I think that from a resource perspective, Jameson Lopp has a really good Bitcoin resource on his personal website, where it's kind of got a whole host of links and is kind of a central collection point for all things Bitcoin. And then CoinDesk actually has like a blockchain 101 section that is got links on what is a blockchain, why is a blockchain important, all that kind of stuff. And I usually send those resources to people when they're first getting started as a great way to kind of jump in and go down the rabbit hole.
And finally, Pomp, I know you recently started a newsletter, so would you like to talk to our listeners about what this is?
Yeah, look, I think that on the newsletter side, it really was a way for me to write longer than Twitter, but not as long as a blog post. And so every day I spend, 20, 30 minutes. I write, 250 to 400 words about some piece of news, and I send it out in a newsletter. And I don't know if I'll do it forever, but I'm enjoying doing it right now. And then I made it paid, right? And I think a lot of people are like, oh my God, why did you make it paid? And the hope is that if it actually becomes valuable to people, I'll take that money and I'm going to hire somebody, right? I'm going to say, hey, your job is to make sure this goes out every day. And do I think it's going to be the biggest, outlet in the world? No, right? And frankly, that's okay, right? I think that just making it sustainable keeps a lot of the kind of the trolling and the scamming or spammers out of it, and really focuses on just, look, we're here to have a kind of high quality conversation. And frankly, it's pretty cheap, right? It's like 50 cents a day or so. I think it's like $10 a month. So it's just enough to make people actually care if they're paying for it, and still low enough where hopefully it's not hurting anyone's wallet.
For sure. Well, with that being said, that was my last question. So thank you very much for coming on to the show and sharing with us.
No, man, thank you for doing this, and I appreciate you having me.
Yeah, of course. And that marks the end of another episode. So if you haven't already, please do subscribe and rate us on whatever platform you're listening to this on, and follow me on Twitter at Mr. Jason Choi. And with that being said, this has been the BlockCrunch Podcast, and I'll see you next week.